We're going to talk more about what this all means. Jim, let's start with what Steve was just talking about. Kevin Warsh's op-ed from overnight suggesting that the central banks need to coordinate and actually step in and cut rates right now. What do you think?
We have the lowest rates, the longest business expansion, the most leverage, and the weakest corporate credit profile, perhaps ever. And I'm not certain what more leverage would do to improve things.
Would it hurt things in your estimation?
The trouble with all of this is that we go from cycle to cycle with more intervention, more credit, more infusion of credit, more fragility. The corporate, as long as we're all doctors, the corporate immune system has been degraded through 10 years of a fabulous bull market, but increasingly weak balance sheets. So I'm not sure what the cure for this is, but I think that a quarter point down the Fed funds rate will not be material.
What do you think the solution is, or is there anything that can be done?
I think the solution is price discovery. I mean, one way of looking at the action today, as in yesterday and the day before, is that we are on the value restoration project. Not all bad.
Where are we in that process, as far as you're concerned, if we're down 10%?
Well, it's a start.
I mean, people have wanted price discovery for 10 years now, Jim, and maybe one cut wouldn't help, but you would acknowledge that the Fed finally easing after the December rout a couple years back, 2 or 3 cuts did help at that point, did it not?
It helped what? It helped the stock market?
I don't know. We were down. We have, I don't know whether you might think it's illusory that the market set a series of new highs, but the economy didn't go into a recession, correct, even though a lot of people were predicting it. Did it help?
How about this, Kevin and Jay and President Trump? How about this? That the Fed offers to accommodate people who present collateral. It will lend at a market rate of interest. It will not force credit down the throat of the market. It will activate the discount window. That was the original plan for the Fed. The Fed was to provide seasonal accommodation for commerce as the market requested that through the discount window. Now we have, for years and years, we have been building this, but we have an all-season infusion of credit, among other things, to sustain the market in financing the eternally growing federal budget deficit. This whole repo business, seemingly so long ago,
is there anything
was about prepping the markets to absorb more and more of this debt. I mean, where does it stop?
Is there anything to the case that you can make that with inflation not really on the horizon, that what's wrong with keeping the pedal to the metal and trying to grow as quickly as you can, making money?
Well, what's wrong with keeping the credit pedal to the metal?
That's what people say.
It distorts judgment.
Right. That's been happening for 10 years, as I said.
So in the Financial Times ran this headline the other day, Bunds, the new Bunds are Greek and Italian debt. They're the Bunds on steroids. And from Davos, we heard, this is all part of the same psychology. Davos, I think, is a very esteemed channel. We heard bold-faced names say the business cycle is over. And I think that attitude has been building over the course of this long boom, as it has forever in the course of long booms. We are extended in valuation, we are extended in time, we are extended certainly in leverage, and we are degraded in corporate credit quality. So we're going to have some, as they used to say, difficulties. And so this is part of the life cycle of capitalism, right? Things go up, things go down. We correct. What do corrections correct? They correct, among other things, the misallocation of resources that follows hard upon the suppression of interest rates.
Can you talk about this particular case here? From people who normally would support a Fed rate cut in the face of gathering weakness, I'm hearing an awful lot of resistance because of the particularity of this issue here, which is, at the moment, it's a supply problem in China. And it's hard for them to see through the normal channels the way a rate cut in the United States would bring additional supply over from China. What's your take on that?
I think that this preoccupation with the Fed, the reactive demand for the Fed to do something is a species of magical thinking. You're right, the Fed is not going to create the supply that is now missing from the Chinese manufacturing sector.
It's the plunge protection team. Right,
Well, it's Joe. I think there's a lot of smarts to that because there is a psychological impact.
That's what I'm talking about.
You got to
you would never
something.
do. You would never do the wealth effect.
But you don't.
And if you
have
do,
to
if you
something.
stabilize the stock market and you're not down $2 trillion, you feel better about it.
And the tension, I think, between Joe and Jim right now. No, but all I'm saying is
I love what he says.
You keep saying
intellectually.
you keep saying it's going for 10 years, and I think your point, Joe, is well, why stop now? Now is not the time.
It's just that if you're worried about price discovery, it might be one giant 10-year built on balsa wood. And I'm not saying it's not.
There are $14 trillion worth of securities priced to yield less than nothing.
I know.
And so as the president said, what's that about? But he wants more of it. I think that on reconsideration, we will look back on this and say those $14 trillion should not have been priced to yield less than nothing, that there was something fundamentally distorted, degraded, and corrupted about credit, and in particular about sovereign debt, but not only about sovereign
Jim, I want to make one point about Powell, which is my take on him when he came into office is I think he wanted to break this.
I think he did, too.
I think he really thought, I think Powell is a conservative guy who wanted to go back to a day when the Fed was less involved, less central. And I think you and him are in great agreement about how the markets provide this critical price discovery mechanism.
This is like a world Game 7 of the World Series when all the people want to know about is the names of the umpires. Tell us. The guy behind home plate, what's he like? What's he thinking about? So we have transferred our anxieties from the marketplace, where they ought to be, to the referees and to the rules makers. Please change the rules. Please infuse more credit so that we can get more leveraged. I don't think it makes sense.
Jim, I want to thank you for being here. I think we're going to have you back more to talk about this because the market at least is betting that you are going to see some rate cuts. So I think.
Oh, I don't doubt it.
Wow. Yeah, you don't doubt it either.
I don't doubt it.